I'd say that most small business owners in Australia think that their exit is either going to be one of four things. They list it and sell. They sell to a competitor when the competitor calls. Maybe they hand it over to family, or maybe they just think it's unsellable. But there is a fifth option. It's called employee ownership. Big fans like today's guest and myself included think employee ownership has huge upside to sustain our small business base as a percentage of the economy, to drive better performance at the level of the SME. There's productivity numbers that come out show increased improvement every time in the UK, US. It definitely supports local economies, and there's this wealth gap that's widening, and giving employees a share of the ownership of a business is a way to bridge that. So today, Andy Farquharson, he's an Aussie. He's living in Finland. He's developing an employee acquisition fund to bring back here at some stage. Founder of A Better Monday and also host of the Alternative Exit podcast. A big welcome and thanks for coming in, Andy.
Cheers, Michael. Thanks for having me. It's great to speak to an Aussie and have a conversation, usually at an Australian speed. I find we have to adjust.
Yeah, with our particular dialect, right?
Yeah, exactly.
Yeah, maybe is there a translation for that on Google from Aussie to international?
Well, I keep trying to tell people here that everyone, when they're trying to sort of teach you a new language over here, everyone's so, they've in Europe, everyone's got the ability to speak multiple languages.
Yeah.
But they've also got an ability to be able to articulate the differences between them utilizing grammar. But Australians, we don't really do a lot of grammar. Like, we struggle with English, let alone sort of translating that to another language. So yeah, I always tell them that English is my second language too.
Well, that's our disclaimer for, if someone doesn't quite understand what we're talking about.
Yeah.
But, hey, Andy, prior to starting your consultancy and advisory work in employee ownership, you were in a tech business, reinventing work, I think was or something along those lines. What led you to employee ownership? What was there a trigger?
Well, yeah, like to run through a little bit further. I mean, I grew up with my father was an entrepreneur, was doing entrepreneur through acquisition before it was a thing, sort of having small businesses. So I saw the power of ownership. Like, I was wondering why my dad could go play golf on a Wednesday afternoon with a bunch of people, and the only he was doing that with doctors. I was I like the look of that. Ownership was always a positive thing there for me. I've sort of had some been a partner with some small businesses with my brother, some really small exits for that. Then in technology, I'd sort of stumbled across a career in technology and just sort of lucked onto a rocket ship that we ended up listed on the NASDAQ. Yet again, sort of gave me a sort of really good understanding of the value of ownership during those transitions. But then in my last sort of, when we were sort of trying to reinvent work, it was in a consulting and training company that I was a founding partner in. And during that time, we were working with high growth B2B technology companies. And a lot of those
in the US?
We're a global business, right? So this is global business called Winning by Design. So we were working, across, and I was started working there in Australia, then in Europe, then in the US. But we ended up helping a lot of private equity firms to then improve their go-to-market engine. So they'd make an acquisition with one of their thesis that, hey, look, what we're going to do is we're going to drive go-to-market growth, and double or triple revenue within the next 3 to 5 years. And we'd help build the systems and train the teams to do that. But it was during that time, we just see this, I don't know, just had this sort of feeling like, hey, that these people are coming in, they own the large majority of the company. The work that they're doing it sometimes felt quite unnatural for what they were doing to the business, like the types of changes that they were looking to be able to do so that they could get their exit multiple, how the people within that business would be treated, and then the outcomes that they'd get. Like, if that company stayed in a venture-backed environment with the equity split that was there, the employees probably would have done better if they had continued on that trajectory. But because they looked for an exit earlier and got that PE exit, these people don't get the outcomes that they probably would have got in a VC environment. So I was just sort of seeing this, I don't know, this sort of challenge that, hey, all this money is just continuing to bubble at the top.
Yeah.
In the PE space. And so this was sort of at a time when I was living in the US and we were living in Cambridge, Massachusetts, and I was riding my cargo bike with my kids from one part of Cambridge to another. And we're just sort of seeing this huge disparity of wealth, even there, like in one of the sort of wealthier suburbs of the US. And just going, and so I had that when I had that sort of dissonance I was experiencing in the work environment with that sort of wealth bubbling up. And as I was sort of understanding the economics of the private equity space, and I was sort of feeling and experiencing this sort of like what I'd talk about two-speed economy, like those people who were owning assets and those people who didn't. It sort of made me start thinking that there had to be a better way for us to be sort of running this capitalist society. And it was, I think the one big moment was when I actually read this book called Companies We Keep by John Abrams. Now, he talked about on the island of Montauk there in New England, he had a construction company and they turned that into a worker-owned cooperative, and just talked about such an amazing journey that they had. And that really got me hooked on sort of going and understanding more about employee ownership and what are the different forms, what does it mean, and how can it help everyone today.
So when did John write that? But when was the experience he had? Was it?
It started in the 80s.
I
Now, John could get me if I'm wrong, but yeah, it started in the 80s. Like, and it was a sort of a long transition. I mean, he sort of built the business with wanting to build something a little bit different and sort of to look after the local community.
So, I mean, there was a set of values there that drove that, and it appealed to you. I haven't read the book, but will. So, yeah, you saw this two-speed economy. You saw it. You're riding your bike, kids, and there's a inequality right there. So, how do you see employee ownership as at a very high level? Like through the rest of the discussion today, we'll drill into some more mechanical and more day-to-day things, but you're steeped in it. So I'm interested in, you got captured by this idea. How and why is it good for the economy and for employees and for, I guess, owners that are exiting?
Yeah, look, the more I sort of pull back the layers of the onion of employee ownership, the more that I thought that this is just an absolute no-brainer for everyone. And I didn't realize, I didn't understand how pervasive employee ownership is. I think there's over like 10% of workers in the US are part of an employee-owned organization, which totally blew my mind.
Wow.
And the benefits, and look, as part of that comes with that sort of penetration of employee ownership, comes with a significant amount of research that's been sort of around sort of the benefits and opportunities. So it's backed by, led by the team at Rutgers University, who are sort of one of the sort of preeminent thought leaders on sort of employee ownership research. Like they've had over sort of 50 years of empirical research on the benefits of employee ownership. And the results are astounding. Not only is it better for workers, and better for workers in terms of like they're more engaged in their workplace. They have in the US they have almost double or triple the amount of retirement savings. They have longer tenure in the workspace, and they get paid more on an annual basis. Like that for the workers, it makes sense. Okay, but this is the part that when people hear employee ownership, they go, yeah, tick, absolutely. But the real sort of part that's sort of another layer of that onion, better for businesses too. The businesses had increase in productivity, increased innovation, better survival rates in terms of downtimes. And there was some really great research around COVID that really sort of highlighted that. And like they've found that they've just been sort of much stronger businesses that contribute more to the local economy. And then the other layer of the onion was that with these businesses having higher survival rates, performing better, being stronger, is that they're better for society too. Because they're rooted in the local communities, and they're not sort of acquired by absentee owners. Sort of they make decisions where they need to relocate a factory, fight for ways to be able to maintain those roots in the local community. So they're maintaining local supply lines. They're engaging more in sporting and social clubs. They're reinvesting that money locally as well by workers having a sort of additional capital that they're then able to sort of spend because they've now got a productive asset, which is usually out of reach for so many people as part of the economy.
Is there a particular type of owner who, beyond their ownership, still wants to see the business and the local economy more resilient and stronger and better? Is that part of the better, the better employee ownership prospects for conversion?
Yeah, look, when you think about sort of retiring owner, like when you think about sort of conversion to employee ownership, like there was a lot of the current models still require some benevolence on the exiting founder. Like they still need to, I mean, not that they need to take any, like they don't need to take any sort of concessionary outcomes. I mean, an exit to employee ownership probably isn't going to be as financially as attractive as a super competitive offer of a trade sale or a private equity bank company who's chasing HVAC who are able to
Yeah.
charge crazy multiples because it's part of a roll-up strategy that they've got going on. But it does, but the unintended consequences of being sold in a trade sale or a private equity backed company is that your team may not be looked after, or that the company may be moved,
Yeah.
and your brand, like the name of the company, which is often your name, is something that's probably going to go as well. And so this is where the when I talk about sort of the benevolence comes in. Like,
Yeah.
if these owners who are willing to take a market rate returns and are willing to support that company in making a transition towards employee ownership, because it does take effort. Like, company employees aren't ready to be owners a lot of the time straight out of the gate,
Yeah.
and companies aren't set up to have a distributed ownership structure. I mean, a lot of SMEs aren't even set it up to have a different ownership structure. They're a lot of
That's true.
it's all locked
Yeah.
up in here. So
Yeah.
that's where we needed sort of people need to be able to come with these benevolent owners needed to come with a sort of a mindset shift to and the energy to make that change, and also that right approach to thinking about the finances and what they want. So a lot of the times, the first questions that we ask people is where do you see the company and your legacy
Yeah.
in 10 years? Like, do you care about that? If you don't care about that, employee ownership's not a good fit for you.
Yeah. It's in the work I do, which is not specifically focused on on employee ownership. It increasingly is becoming one of the very most viable exit options. But I
Yep.
start with, with owners, what do you want to do after the business sells? Are there any conditions that you'd like to put on the sale? And sometimes it can be, I do not want to sell to that big company, or I do not
Yeah,
want to sell. Well, but it's the same kind of thing, right? And
totally.
look, as you get out of the really big metro centers and you get into regional settings where the outgoing owner sometimes often is going to stay there. They've grown up in that town or that location. And so that's another, you know,
Yeah, I mean,
call
walking
it,
down the
but it's basically I'm going to be walking around and, if I sell out,
Yeah, how do you hold your head up high in the coffee shop? Like, when a couple of your former employees come in and say, "We're closing down our warehouse."
yeah,
Like,
not sponsoring the footy club anymore or the netball club.
it's tough. These are
Yeah.
things that for some people, these are
Yeah.
things that they've held their identity on, that they've
Yeah.
been able to, like, contribute. They've built this business for 20, 30 plus years, contributed to the local community that they love, and then someone goes and makes decisions that don't align with their values.
I have done a lot of work outside the metro areas, and it's that feeling comes up a lot, and you can see when there's no obvious successor to businesses out there, why cooperative or mutual or employee ownership is the one. They're the things that are going to make that pub, that supermarket viable. The owners or the workers or the community stepping up saying, we're going to own it and run it. Otherwise, we don't have it. Like, it's quite a stark choice.
Yeah, especially for those services, the services in the local area, like, it's so critical, like, that there is that sort of local connection,
Yeah.
and it's tough to see. I mean, you even see that with some of the, like, some of these sort of pub conglomerates that you see sort of in Australia, who sort of look and go and buy these sort of local establishments out in sort of regional areas, and they're the first ones to close down in hard times. So that's sort of critical. And then also you do see those businesses who have, I guess, a broader customer set who are outside of that local region. If they are bought by an absentee owner, or so someone who doesn't live there, they're more open. They're more open able to making decisions that don't benefit the community.
Yeah. Yeah.
Yeah, local ownership has a huge impact.
Yeah. Across businesses and across key commercial real estate, even because they house the businesses, having that discussion over coffee this morning. All right. Setting the scene for, you've been at your business for a while now, silver tsunami. We hear that term a lot, this impending transition of boomer owned businesses. If I got this right, you're a bridge financier. Do you want to just explain how?
Yeah. I'll explain sort of what we're trying to do. Okay, so
Yeah.
when you talk about at the start, you asked me what drew me to employee ownership. So you think about our mission is to solve sort of two really big problems. I mean, one we see is that global wealth disparity is at the highest point that's been since the Gilded Age, and when wealth disparity is that high, it doesn't end up well for anyone. And then the other side is that, like, worker disengagement, 70% of people don't like going to work. So we
Yeah.
wanted to be able to create better environments for people. And we see employee ownership as an amazing avenue to do that. And so our idea, what we want to be able to do is to sort of take advantage of this silver tsunami, to acquire these businesses that typically don't have an exit option available to them, be that sort of for people to be able to come in and provide the capital and also provide that change management expertise to enable them to thrive in an employee ownership culture, and then transition the company towards employee ownership over time. So we guarantee our exit by utilizing the future free cash flows of the company to retire our equity. So we don't need to do anything unnatural to these businesses that aren't built for scaling, for rapid growth to sort of the typical private equity 3 to 5 year exit. But we have engineered the exit into our business model in what we're trying to do. So we're
So
raising capital
you're
to be able.
right, and you're stepping in as a financier in the capacity as a Better Monday or whatever, a vehicle that you've got. I guess it means you're backing the model. You're giving time for the key people, the owner, the employees to get used to this,
Yeah,
work out what
exactly.
we should do.
We're not just putting in cash. And if you only do cash alone, these transactions are never going to work. But we know that there's sort of three things that are really required for employee-owned businesses to not just operate without the existing owner, but to thrive in the future.
Yeah,
And this is backed by that 50 years of empirical research I talked about
yeah,
earlier. I mean, the first one is that people need to be educated. Okay, so these workers need to really sort of understand two things. I mean, they've got to have the business fundamentals. They've got to understand a P&L, understand a balance sheet, understand sort of what that means, and then they've got to sort of understand a little bit more about what that means for their business. So they need to be sort of and what it means to be an owner. Okay, so we've got to teach people how to wear two hats. Like you got your worker hat, then you've got your owner hat.
yes.
Because
Still got to be a good employee, do what you were employed to do, but
exactly.
also have another hat. Yeah.
Yeah, so and so that's where you're educating people to be able to make smart suggestions and contribute in a positive way. So instead of just saying, great, like in our tea room, like we don't just want better quality biscuits and a new color of green. Like what does that investment mean for the business, and what else could you have done with that money? So that's the part, that's sort of the education piece. When you think about the next piece is around, once your people have been educated, you then need to give them access to the data, right? Open up the books of management. So sort of following on from sort of Bo Bellingham's book, The Great Game of Business, like how do you
Yeah.
teach people how to keep score? So yeah, and give them access to the data to do that. And then the third leg of the stool is really around sort of those participatory frameworks. So they've been educated, they've got the data. How do they engage in the business? This is about making governance an active process within the business. And so look, what we're trying to do, like we're trying to provide the capital, and then we're going to be going through doing this, ticking off those sort of three elements of what we call the owner operating system, and sort of implementing that both with culture, training, and also some technology to support that too.
Yeah, there's money around, and good businesses will get bought because there's plenty of money around. But if it's when it comes to owners in new ground with employee ownership and employees in new ground, you need more than the money. Yeah, you
Yeah.
need a period.
Yeah, I mean, and just to touch on that point, you said, like, I mean, yes, you do need more money, but when you said companies are going to be bought, like this is sort of one of the big challenges. Like, the good companies are going to get bought, but under what terms and why? So if you think about like that, I don't know, I don't know the exact sort of numbers in Australia, but I don't know, there's about 450,000 companies, I think, with an owner that's going to be retiring in the next 10 years in Oz. I don't know if that, and I think, is that
Yeah,
about right?
look, I hear different numbers, but it's
Yeah.
of that sort of quantum, and it's interestingly, I was looking at some numbers. A major business for sale website for the last quarter of this 25, there were 733 sales of businesses on the site. I mean, like that's only one way. There's a lot of off market, but I'm thinking compared to nearly 1 million employing businesses in Australia, that's a small, tiny number of businesses to actually, publicly transition. So we're going to need a hell of a lot more than that.
Yeah.
And that doesn't include their other sites and there are other off-market things, but I went, wow. If they had said 10,000 businesses sold, go, I wouldn't have dug into it too much, but 700.
700. So if we take the 700, like, the data that sort of comes out, like there's a third of those let's say a third of being very, very generous, a third of those go to a generational transfer. So passing it down to your kids or someone in your family. Okay, very rare. I think that number's super high, right? But it's still, but that's sort of some data sort of points to that, right? Then you go like, there's another third. It's going to sort of come out, and that's going to be sold to, say, these sort of private equity or trade sales. Okay, like, and that, I mean, that's still a huge number. That's 220,000 companies are going to be sold to that in that kind of, or 230,000 in to a private equity or trade sale. That's massive. Like that's well and far exceeds the sort of number of transactions that are happening today, and there's just not enough buyers for those businesses. And then so that, sorry, man, I'm just trying to get my camera to focus again. But like, then you get but then what happens to that other third, right? Now, these are the third of the companies, which may not be traditionally in high growth industries or in markets that enable these sort of traditional buyers or search fund operators to be able to generate the types of returns that they need to get. But they've been businesses that have been running for years, like, and enduringly profitable.
Yeah, definitely sustainable, definitely important in that, as a link in that local economy. So no, the numbers are, are really big, scary, are full of opportunity, absent something like employee ownership, community ownership, just generating more entrepreneurial people like the ETAs, who is a breath of fresh air because they're out there actually buying businesses. Let's talk about in the market right now. So I can only really talk from Australian experience. It feels like, I know there's been worker cooperatives for a long time and some stellar examples of employee ownership. The people I talk to every day are traditional small business owners. I think firstly, the legislative policy environment is not right. Yeah, we don't really. There are some forms of employee ownership, but I also think there's a lot of education to do, and I also think if there is any understanding, it could be a misunderstanding of what employee ownership is about. So, what do you think are some of the what would you call out as some of the misunderstandings or misgivings on what employee ownership is or isn't?
Yeah, there's two that I get all the time. I think is the first one is like when I tell people about sort of employee ownership, it's just that's just communist, that's socialist, like socialism, like and people, and that creates some fear and stops people from having a real conversation about it. Like I think this is the part, like there is a really sort of big difference between sort of like this whole sort of economy-wide ownership versus this sort of small-scale collective capitalism, which is employee ownership. So that's sort of, I think that's one of the biggest misunderstandings, right? Is that like this is sort of, it always sort of boils down to one worker, one vote. That sort of, and that types of decisions are going to be sort of any type of decision is going to be mine, and internal bureaucracy that these workers will never be able to figure out. So that's sort of the one sort of common sort of error that I see people talking about. Look, the other one is more of a sort of fundamental belief in people. Capitalists, like a lot of capitalists and a lot of owners, think that this business will never be able to run without a strong leader at the helm.
Yeah,
and they think that employee ownership doesn't provide that. So I mean, the two corollaries to that, like, is that one, employee ownership doesn't mean you don't have a leader. Like, there's a distinct difference between ownership and management, and the governance structures really enable that. And then two is the rise of self-management organizations, the likes of sort of Morningstar, the tomato manufacturer, the tomato processor over in California, coming out of China. And there's a whole, like, there's some Compass in Australia, like some amazing examples of self-managed organizations that have really sort of decentralized the decision-making process, that show that strong leaders in a hierarchical top-down type of decision-making process aren't typically the best way to create really strong and engaged workforces.
Yeah, okay. Good one. To go to an owner, if you get approached, you have the opportunity to talk to an owner who's considering employee ownership. What are the first few conversations you have with them to make sure you're both on the same page and going in the same direction?
Yeah, it's funny. This is one of the questions I ask all my guests on my podcast too. Is that, well, how would you talk to an owner? Like, I think my conversations have been changing a little as I've been going through this process. I've been sort of learning more and speaking to all the people who are doing these transitions across the world. A lot of we've got to sort of take people back The questions have got to take people all the way back to the awareness stage and help them be aware of what do they want in the future. So there, I sort of alluded to a little bit earlier. What is it that you want? What is the legacy
Yeah.
that you'd like to leave? Where do you see this company in 10 years? So people, and where do you see yourself in 10 years? So understanding that is the sort of key to unlocking a little bit more about what they want. Like if someone just says, oh, look, I just want to be sailing around on a yacht and I don't really care what happens. Yeah, great. Like that's when you go, employee ownership's not going to be a good fit for you, potentially. But if someone says that, hey, look, I want to reward my team, I want to preserve my brand,
Yeah.
I want to sort of be sure that this business sort of continues to operate for many years to come. You go, great, okay, like then you can start having a conversation around sort of employee ownership.
I was just thinking about that one where they don't care, and I have seen where there's a group of senior managers. So in a particular firm, and then the owner eventually, and I talk them through that. You look at the structure of that business; the senior ones are going to be vital to sell the business to anybody else.
Yep.
So you really do, even if you don't want to, you need to engage with that team, because there's an opportunity for them to you can reward them for going across to make the sale smooth.
Yep.
Go across to but there's also I've seen where that's worked the other way, and they've gone, well, we're not going to go across. We want to buy the business. So I guess the point is that depending on the structure of a business, if you've got some key employees, which are very attractive to any buyer, they're also that at some point some of them wake up and go, hang on, we've got a bit of leverage here.
Yeah, look, it's super important. I always say to owners that bring your employees in as part of the conversation. A lot of people are sort of scared to be like have their employees treat them as hostages, like within the
Yeah.
sale of their own business. That fear could be real. Okay, but it also that it could be real, but it could happen anyway.
Yeah, yeah.
But it could happen. I mean, it could happen once you sort of sign the deal, and like you might get sort of 70% of your deal sort of up front, but that last 30% could be at risk when these key employees leave, like from a
Yeah.
clawback or something.
Yeah.
Or I'm sure most good buyers are going to
Yeah.
have sort of within their reps and warranties that hey, if these key employees leave, sort of the deal's going to be made redundant. So you're like, it's going to happen anyway.
Yeah.
These employees are going to find out. If you bring them in as part of the conversation
Yeah.
earlier, it's going to help sort
Yeah.
of shape sort of better outcomes for the business. And the new owner or owner.
Yeah. I mean, is that case by case depending on the culture of an organization, or is it just, a good practice is to bring them in earlier than later for those reasons?
Well, I always think it's a good idea to sort of bring it in earlier. I mean, I always
Yeah.
support sort of a more open communicative organizations
Yeah.
anyway, to be able
Yeah.
to sort of help people understand like this is what's going on and this is sort of what's happening. Because I mean, your time's going to be eaten up. Like as an owner, like the sale process, whether you're selling to employee ownership or a trade sale or anyone, it takes a lot of time. It takes a lot of stress. They're going to be feeling something's going on anyway. They feel it. They understand. They wonder why your calendar's blocked out. They wondered why these people who are dressed a little bit differently are walking through the
Yeah.
factory floor. They are talking about it. So may as well just tell them what is the process, what's going on, how you're going to be making these decisions. And look, if you help them understand like how that's going to benefit them, if you are going to benefit them, if you're not, just be open and communicative about it. And like people will appreciate the openness.
Yeah. It is one of the big dangers, as you say, in any sale process where the eyes go off the business or the foot goes off the accelerator, because and if you throw in an employee team, the outgoing owner and the potential employee buyers, and then you've all got to keep your eyes on the prize, because what you're buying can be impacted pretty short term, really. Like, you have a couple of weeks or months of distraction in some businesses could be quite telling.
Yeah. Yeah, totally. But that's also, I mean, if you are able to structure it where you do align incentives a little bit better, people are willing to make that change. Like they're willing to come in and spend that little bit of extra time to get that work done. Keep that eyes
Yeah.
on the ball. I'll be distracted for an hour when we go and have this sort of employee group conversation, or when we go and talk to these potential acquirers. But we know, like, if people are educated a little bit more, hey, if our productivity drops to X, right, $100 drop in our productivity this week is going to mean $300 to our valuation. You're going, okay, all right,
Yeah.
well, this is meaningful. And
Yeah.
people understand sort of that of that 300, they get 5% of that. Like, all right, well, we're gonna make that up. So these are like it can go inverse too. Like people also understand like, hey, if I am going to be a buyer and if I as an employee, and if I drop in productivity by $100, then it's going to be 300 cheaper. People are going to be made aware about what does that mean as well,
Yeah.
and how you're sort of matching, like protecting against that.
Yeah. I mean, that is a progression in the way someone's thinking because they've, maybe before been good employees, do what they got to do. But then there's, whether you're in like an ownership governance level role or even just a beneficiary of the profits of the business, you have to, you got to start think about what I do and what the team does now. I have an interest in a direct line to it. So yeah, it's
Yeah, I
part
mean,
of
it is part of it, but that requires that awareness. It requires that sort of education and that open book management. So yeah, there are some challenges with doing that, but that's where that need for strong and open communication is key
yeah,
throughout the sale process. So you can get the support as an owner to make that transaction, like and finalize that transaction and get your exit. Because Mike, I'm sure in a lot of the work that you do, like, a lot of businesses, a lot of owners aren't ready to sell. Like
no,
their businesses are not set up and established in a way that makes them a really valuable asset to anyone else. And to do that requires some sort of cultural changes in how they think about things, but also how you're interacting with the other people in the business.
yeah. Look, a lot of it gets grouped up as business sale readiness or exit planning. Increasingly, I try to frame that in terms of you're making your business more profitable,
Yeah.
more resilient, better, and you increase the pool of potential buyers, and you also make it easier to keep the business if that's what you end up doing. Because if you've got a this is the irony or the if you've got a business that runs effectively under management, are you going to get a better? Would you get a better return on an investment than that?
Elsewhere. Yeah. What else are you going to do with your money? Like people need to be doing these kinds of things anyway, just to make great
That's right.
business.
Yeah, yeah. And I think the term exit planning is pretty prevalent now, but I think it I think it scares people because it's psychological. It's about getting to, the exit, which for some they're very clear on that it's a pathway they want to go down. But for a lot of others, well, I'm not quite ready to exit yet. But you should be ready to make your business better and more resilient and more profitable. So call it
Yeah.
coaching or advice or whatever.
This is a challenge I've got as well. I agree with you. Like, this is sort of one of the things that people have. But exit planning, it does create an event that people are interested in. It's tough to get people to invest in doing the hard, boring work that's required to make a great business. Setting up the right kind of operating systems and structures, setting up sort of documenting all their processes. They could have done this. They could have read any of the books. They could have done there's so many avenues that they could have had on the path to invest in this kind of process, but they haven't and they didn't because it's hard and boring work. At
Yeah.
least an exit planning does create a critical event for people. Hey,
That's
look, to
true.
get
It's something I think deeply about, and I wonder if it could be renamed or
what would you name
because
it?
what would I name it? I just call it
Yeah,
business improvement consulting, but
people do
resilience
that.
building.
That's been happening forever, Mike. People have been
Yeah,
doing business, but
yeah,
why don't people invest in it?
yeah. Don't have a
Yeah,
really strong view, but I know that I know what does happen is that most owners get to a point, and often it's not about the money. There's some other trigger event, health, relationship,
yeah,
personal crises, an approach from there's a whole lot of other things, and when you get to talk to owners at that point, if you're able to have an open, trusting kind of conversation, then you can actually start to feed into the conversation. Well, these are the things that I think you ought to do. I think given what you've told me, but it's then putting their hand up and saying something's really wrong. It's often kind of later than you'd like. I don't know. Well, a lot of people have insurances for a lot of stuff, and it's like protection, and whatever's done there is maybe there's something to learn from the way they they pitch that. But anyway, types of businesses you think are better suited, if at all, to employee ownership?
I always think that sort of any business can be good for employee ownership. Any type of business. It's not restricted to professional services firms. It's not restricted to manufacturing firms. I think that it can be any. I think one thing that has been relatively true is that they're not good in turnaround situations. It's tough because it does require an investment in culture. It does require an investment to be able to make the change. And it's really tough to do that in an environment where there is no capital to invest in those kinds of situations.
Yeah.
So, and I think that there was like during the 80s, there was some sort of very sort of large failed ESOPs that was trying to get it. That's employee share ownership plans that were put forward they were put forward as that turnaround, and they didn't fail well. But and when you look at the sort of the finances, like how do you actually bring in those consultants to be able to help? How do you invest in the systems and processes to do that? It does take capital. So yeah, it needs to be a profitable business. That's sort of, for me, is the one caveat. Right? And then look, I put another one is that you need a critical mass of employees. I think so that it's not so you can actually sort of create those participatory frameworks in a fair and equitable way, and you can distribute the power. In some structures, like you see that sort of in some cooperatives or shared ownership can be as low as sort of 3 or 4. And we, as at a Better Monday, we look for a minimum of 8, I guess, as small as the businesses that we'll work with.
Yeah, I was on a session today with Graham, not me and Graham, but he delivered it. Andrew Clements was there from Employee Ownership Australia. But I mean, Graham's got extensive global experience, but closed out and said that 10 employees was where he thought it became viable. So it's it's in the realm of your 8. So I was did some quick math on the number of those businesses in Australia, and so I reckon it's it's probably only 10% of all businesses.
What was that ceiling? So from 10 to what?
Well, no, he didn't have a ceiling. He just said a minimum of 10 employees. So we've got 2.8 million small businesses, 1.6 or thereabouts, 0 employees. They get called small. Then there's another band of 1 to 4, which is about another third. So it leaves about 10% of the businesses between, I think it's 5 to 19 employees, and then over 20. And I don't know what the cap is, but it's 10% is of the often quoted 2.8 million is might broadly
very small businesses.
If you could convert a quarter of those, right? That's a substantial, because I think a lot of those aren't going to sell or are going to have owners burning out. So there's a lot upside. Can I ask, one of the things I've been exposed to is the zeitgeist is there's employee ownership could be between the socialism or the union, and then at the other end there's really slick private equity, or that seems to be the continuum, and of styles of employee ownership. Do you have do you see it that way? Do you have any, or do you see that there's a lot more in the these employee ownerships trust, and there's a lot of good solid owners and employees getting together and making it happen?
Yeah, I guess the sort of that continuum that you talked about between sort of like that collective ownership towards like the more sort of venture private equity or venture capitalist style. I mean, I do see it's more around the decision-making framework, and how people are thinking about the future of the business. So at the moment, sort of like on the private equity, like PE or VCs, these people, like a lot of the time, they do distribute a portion of the ownership. I think sort of the average sort of venture-backed company sort of has about sort of 5 to 10%, or a little bit less of stock allocated towards employees. PEs probably is even less. And they have, they're driving short-term changes to they're driving these short-term changes to get short-term returns. That's what they have got to deliver to their limited partners.
And dragging the team along.
Making inorganic changes to these businesses to try to generate the outcome. Sometimes that leads to, and fast. So sometimes that leads to massive hiring. Sometimes that leads to massive firings.
Yeah.
Right. And on the other side, you've got the continuum of sort of more collective ownership, where you really do align incentives for the long term. So on one side, when you've got sort of really around the private equity, sort of institutional capital, really focused on short-term incentives. And I see sort of on the other side of the continuum is more about long-term incentives. So if we're able to sort of move towards sort of like these sort of more employee-owned, we're broad-based employee ownership. People are much where there is sort of incentives for people to look after the next generation of owners, and the communities that they're in, they're going to make much better decisions for the long term of the company. Hence why these companies have high survival rates, because they're willing to take less in the short term to ensure that the business thrives in the long term.
on that continuum, there's still at the heart of all this is a small business that needs to be actively managed, and they're all challenging. And
Yeah.
that's why, I love small business owners who, to their own detriment and others, they put everything they've got into it, and they take on any challenge, and it's incredibly admirable, but it's also, it wears them out at some point, and it limits their options at the, later on. So
100%. Like I was chatting to an owner of this of a stoneworking company here in Helsinki yesterday, and I asked him like, "Hey, what would the business do without you?" And he goes, "Look, are you sort of replaceable within your business?" He goes, "What I'm doing is not hard. It's just time and effort. I just solve little problems. I solve lots of little problems every single day, and I need to be there to solve those problems because." I go, "Can anyone else solve those problems?" He goes, "Yeah, they're not hard. They just need to be solved." So
yeah,
it was really sort of another great window into sort of what small
yeah.
business ownership is. Like his
Well,
mind's always on those problems.
yeah, and that includes Saturday, Sunday, 12
Yeah,
o'clock, and they're all, everyone's capacity to want to be tuned in 24/7 or 12 hours a day. That's a continuum as well, where some people are very happy with it.
some
Well,
people are happy, and
and that's
we've talked.
fine.
Yeah,
And
but we've
others,
also talked. Others don't want that. And we talked about the
yeah,
fear of owners in an employee ownership scenario. This is also a big fear. The inverse is the fear of the workers in an employee ownership scenario. Sometimes these workers don't want to, like, I don't
yeah,
want to be thinking about the business on a Sunday. I
mm,
don't want to have to think about having a tough conversation with my friend that we might have to let them go.
yeah, yeah,
They don't want to have these conversations. I'd say, but they don't need to.
yeah,
Setting up the right governance structures, setting the right accountability frameworks within the business means that they don't need to, like someone does, but maybe it's no, that one person doesn't have to have all the problems.
yeah,
Maybe we've got one person on Sunday night thinking about their deliveries for the next morning,
yeah,
but they also don't have to think about. They also don't have to think about sort of the actually sort of the manufacturing that's happening a little bit later in the day,
yeah.
which is all sort of stuck in one person. It's all about how do you better align the decision-making processes and the actual work that happens to decentralize that across the worker base.
I fundamentally believe there's a lot of employees who could transition. Some don't want to, some can't, don't have the whatever. But
Yeah,
I've met others, and it's not going to happen overnight, and it's not going to happen just because you're now an owner. So that period where you talk about culture and bringing in outside, take everyone on a journey.
yeah.
But it's like I think owners often really completely undersell how important they are as well. They just go, "Oh, it's just what it is. The little problems, There's some, what they achieve is unbelievably,
It really is. Like, and to that point, Mike, we typically see, like, all the experts talk about the employee base breaks down into into thirds. There's a third that is super engaged, love the idea of ownership, are very engaged. There's a group that's ambivalent. They're not sort of really. They engage, they participate, but not really driving the company forward. And there's a third that don't really engage at all. Okay. But I think the beauty of an employee ownership and more of a collective ownership is that people can move between the three depending on their life circumstances.
yeah, yeah,
Whereas an employee, like as an owner, they're stuck
yeah,
there. They are in the engaged third the whole time. I would say, like you have a kid, you might sort of just move out from one third into
yeah,
another,
yeah,
and your teammates will be able to come and bridge that gap.
yeah. Okay, yeah, I like that. Hey, you're working out of Finland, but you're tapping into the broader European employee ownership material, and you're seeing these things in Slovenia and the UK, and I think interacting with people. So, given what you're seeing there, what's your plans, and what are you going to try to bring back here? Is that to Australia? Is that what you're aiming to do?
Yeah. I'd love to be able to do that. What I'm sort of what I set out to create with a Better Monday is a model of employee ownership that can be financed and that can work without the regulatory environment that really supports employee ownership to thrive sort of without the finance, without that capital support, without the sort of the consulting support. So that's what we're trying to model here in Finland. So we can then apply that in any region. Like just sort of being very pragmatic, leveraging sort of what's available within the local laws and bring that back to Australia. Like, and because ultimately I want to end up in Australia. I want to end up back there. And so I want to be able to sort of build a track record of our ability to be able to convert businesses and then come back and do that at home.
Yeah, cool. We'll look forward to that. I think just a couple of things to close on. You've got a full day in front of you, and I have
You've
a
got a bear
cold
ahead of you.
almost waiting after chatting. So I do want to bring regional communities. I live in one. I've lived in a few now.
Yeah.
I do a lot of work in them. Is that where you could see employee ownership perhaps getting a bit more of a wriggle on, because those businesses that might otherwise not be around could be preserved. Preserved's not the right word. Sustained.
Staying.
Because of employee ownership.
Yeah, I think regional communities have there's an outsized impact for growing employee ownership in regional and marginalised communities. Like you see that very much in marginalised communities over in the US, sort of employee ownership having that big impact. And I see sort of regional communities as being is such a strong need. And you highlighted some of those sort of great examples in terms of services that in those local sort of regional centres. But yeah, I think it's a huge impact, and I think there's a big opportunity for local investment too. There is sort of bridge sort of capital is required, or benevolent owners. Or you can talk about, because a lot of sort of employee ownership is funded just through vendor financing. But if there are local people who want to invest in the local community and want to do that and focusing on uh, uh, like a cap, like in a sort of capitalistic, want to invest in a productive asset, I think employee ownership is a great avenue to be able to do that while also
Yeah,
supporting local
yeah.
community.
It feels like it feels like to me there's a few people doing some work that I'm privy to and pitching this stuff, and it's basically, I think, at the core it's saying there's an owner in a business. That owner, get around them, because they do take on a lot. But without that business, so, bringing along local economic development, bringing along staff, bringing along the broader business community, because they're all interdependent. That
Yeah,
a business falls, it affects everybody else. So it's a that's something that I'm hoping gets a wriggle on here. You're seeing it internationally, but I see it as but employee ownership at a macro level to be really successful, possibly in a lot of jurisdictions, if not all. Is you've got to have cultural fit. You've got to have specialised or understanding financing, and fundamentally a workable deal that where owner and employees can, at fair value, say this is good for both of us. So cultural fit, financing, and workable deal, is that a three-pronged set of conditions that, from which we might see, or are there more, or are there different ones?
yeah. I think that like they're all good. They're all required at the moment. Sort of the cultural fit and capital is sort of taken. That's where I refer to like the benefactor owner steps into that role. So large sort of employee owned transactions are done with vendor financing today. So they're basically deferring the payment over the next 7 to 10 years. But yeah, and sort of and they're supporting that cultural change. So yeah, they're really really important. But there are also complexities, and so I think the other leg to that is having a regulatory framework to be able to establish employee-owned businesses. Whether that's a trust, whether that's a cooperative, whether that's a foundation, like that we need to have the appropriate frameworks for people to be able to do that simply, because it can be costly to jump through those hoops to figure that out effectively.
Yeah, and that's for here it's with the federal government fundamentally, and we had an interest rate rise today, and pressures mounting. A lot of talk already about we need to increase productivity. So here we go. Here's a way to deliver that through the small business part of the economy.
Yeah, I mean, that research showed that employee-owned businesses are 12% more productive than their non-employee-owned peers.
And it happens. The data comes thick and fast from around the place. So,
Yeah.
right. So this is to close on, Andy. If you got an outrageous offer to come back early and take up a role as the head of the Australian Federal Small Business Department, what would be your top three priorities once you put your foot under the cabinet desk on
Do I
Monday
have
in
to live in
terms of
Canberra?
Canberra?
Anyway, nothing against my Canberran friend, but firstly, I mean, obviously, I'm here about employee ownership. I love it. I'd create a regulatory environment that supports transitions towards employee ownership. and supporting the ecosystem around that. So
Right.
that's sort of all about sort of supporting the Employee Ownership Association of Australia and how to actually sort of drive the education of all the service providers. So people like you can be advising businesses on how to drive employee ownership forward.
Yeah.
The second element would be to like adopt something similar to this, what the Small Business Association in America does with their loans in terms of providing capital for transitions of ownership. I think that's still one of the huge barriers. Even in the ETA space, entrepreneurship through acquisition, these people still need to find the capital.
Yeah.
And at the moment, they're going to traditional sort of private equity spaces who don't have that long-term thinking, and they still need a house as collateral. And it's really, really difficult. So having an SBA loan
Yeah.
to be able to provide that, like sort of any preferential rates or even just guaranteed via some form of community development bank would be amazing. And then lastly, I think that we need to, again, take the shine, like not say take the shine off, increase people's awareness that that small business is still a fantastic way to be able to build and create wealth, right? It doesn't just happen through tech unicorns, right? Which is sort of in the zeitgeist today. So I'll probably do that through like an internship. I like to partner with the universities, partner with the trades, the TAFEs out there, and create more sort of in-person internships with these small businesses, so people get that understanding and experience in working with different businesses that aren't just big corporate and big tech.
Fantastic. Thank you. Love it. That last one of my pet subjects to talk about is the average Australian family balance sheet, and business equity comes in after furniture and fittings.
Wow.
So we're housing, superannuation, cash. It's really quite tragic. So there's this gaping hole, and there is equity in business. So we want people to see that wealth building, but equity on your balance sheet. You could sell your business for this much money, and maybe even it moves up past furniture and fittings. And anyway, Andy Farquharson, thank you so much for your time. It's been terrific to chat to you. I really do appreciate it, and I look forward to sharing this around. Go well.
Yeah, cheers, mate. Really appreciate the time for joining. And look, if anyone does want to listen more, or learn more about employee ownership, come across the Alternative Exit. You can find us on YouTube, Apple Podcasts, Spotify, wherever. And also, we're always interested in chatting to owners wherever they are who are looking to transition to employee ownership. So, yeah, you can check us out at A Better Monday. We've got some resources there and put you towards some other great resources like the EOA in the UK or NCEO in the US, other firms who are providing some fantastic information. So, yeah, Michael, thank you so much for having us on and raising the awareness.
Good on you, Andy. Take care. Catch up soon.
Cheers, mate.